Morning, Steve Freed in Chicago with the morning grain comments. It continues to be cold here across most of the U.S. Midwest, and that's the forecast over the next week or 10 days. As far as the cold weather impact on the markets, I think it's the first time that we've seen the nearby U.S. soybean barge market invert because of the cold weather slowing some of the logistics and getting beans to the Gulf. So that's kind of helping the bean market there. Also, domestically, you've got a better bean basis to the crusher than you do the export market. So if there's any slow movement, they have to bid up for those beans, and that's helping the nearby futures. We've got them up 8 to 9 cents overnight. We also noted yesterday that the Brazil trucker strike was expanding from one province or one state to 7 states, and we were some of the people in the market were surprised that the beans didn't react to that more, and so overnight beans are up about 9 cents, and I think that the beans are reacting to that. So I think that historically some of these strikes really haven't lasted that long, but this one is beginning to impact the availability of diesel fuel inside of Brazil and the movement of beans to the Gulf. And so we're going to have to watch and make sure that there's no switching of Chinese vessels to the U.S. and the impact that might have on the bean market if this trucker strike continues over a longer period of time. Fundamentally, you still have a lot of beans in the world, and that should offer the resistance to prices. But right now, we've got a little bit of a hiccup on the not only the concern about slowdown of beans to the Gulf in Brazil, but also concern of the slowdown of beans to the movement to the U.S. Gulf ports. Corn and wheat markets kind of following somewhat reluctantly. Cash markets in the corn, you're seeing the domestic basis firm up a little bit because of this cold weather and some of the logistic issues, but U.S. export basis is slipping a little bit lower, and right now Ukraine and Argentina corn prices are cheaper than U.S., so that could weigh on a little bit of the corn demand. Over in the wheat, Egypt announced a tender overnight for U.S. wheat. We'll see if they come in and buy any wheat. To this point, wheat prices have been under pressure because of the lack of this export demand. Cold weather in the United States is not expected to hurt the winter wheat crop, and as we get closer to first notice day, there was some talk of some increased deliveries in the Chicago wheat, which caused some of those spreads to collapse. As far as the other deliveries as we go in, with this inverted SIF market, we doubt if we'll see much bean deliveries initially. And in the corn market, it would probably see some deliveries come out after the stoppers in the December contract. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.